Good morning, ladies and gentlemen. How y'all doing? It's Mr. 444, and I got a good friend, good smart colleague of mine by the name of Skye, Shangraw. She represents
Hi.
she represents preferred lending, and I reached out to her to get some of my listeners and some of my subscribers of look of how the process and what it takes to be able to get approved for a loan and the nuances of getting a loan, etc. And I brought it on this platform to be able to show y'all and be transparent in what I do as well. And I like to introduce Scott. How you doing, Scott?
Hi, I'm doing good. How are you doing?
I'm great. Thank you for taking this opportunity to time out to sit with me and to explain to me the process of your business loans and term loans and things like that. For our viewers, could you tell them what company you represent and what do you do?
Yeah, absolutely. So I work with Preferred Funding Group, and we help small business owners, startups, pretty much anyone for any reason get funded. And the way we do things is we're able to get you funded a lot more than you could get on your own if you went to a bank. Um, we do reach out to multiple different lenders to get clients funded. So instead of just $20,000, if they want to get between 50,000 to 500,000, that's kind of our range of funding. So it is just based on a personal guarantee. We ask for a 680 minimum score and then proof of income. That's all we need to get clients funded.
Now, when you're talking about the credit score, could you give the listeners what credit score, what range are you looking for, what credit score range?
Sure. So we want to see at least a minimum of a 680 credit score on the FICO bureau. So either Experian, Equifax, or TransUnion. And 680 and above is ideal for us.
So 60 and above. And now, let's talk about how long you have to be in business, how long your company have to be created, how long you have to be in business. Does it have to be a new business, a long business, 6 months? How long they have to be in business before they qualify for a loan?
That's Yeah, that's the best part is that there's no minimum length of time in business required. It doesn't even need to be established yet. This is just because we base our funding off a personal guarantee. So we look at the applicant's personal credit and income, however they made money in the last 2 years. It doesn't even have to report to the business. So if they had a standard W-2 job from another corporation and that's how they're confirming their income, that works for us just fine. And basically we just want to see at least 50,000 or more in income for their last 2 years of tax returns. And then the more income they can confirm, the higher in our range of funding they'll be able to achieve.
Now, let's talk about the credit pull. When you pull their credit, determining how determining factors, what do the client need to send you to be able to qualify? What do you look at? What do you ask the client? Do you pull a hard pull? Is it a soft pull? How do you protect the client from getting a hard pull to be able to try to determine if they can loan at the same time protecting their credit?
So during our basically pre-approval phase is what I help our clients with. There's no hard pulls; it's all soft inquiries. And then once we get the soft inquiry for their credit report, I look at their debt to income ratio, their utilization, if they have any other recent inquiries or any delinquencies, late payments. Basically, I just want to see a good credit report to ensure we have a candidate that's going to be trusted to pay off the loan. So, um, pretty much that's just the basis of what I look at on their credit report. And yeah.
Now, when you say the basis of looking at their credit report, right? Now, let's say some may have collections and charge-offs. Would that deter them from dealing with them if they have a repo on there, but they still have the credit score to carry it? Do lenders shy away from repos? And maybe you have a charge-off from a $200 credit card, or would they tell you to pay that credit card off, or would they be
Um,
shy away from?
Yeah, no, it depends how recent those were. If it was in the last year or two, that's probably going to deter the lenders from accepting them as a client. However, if it was longer than like 5 years ago, and even if they have a couple $100s that they're still paying off, that's fine. We just want to see a debt to income under 40%, and we want to see the revolving utilization under 30%. and then no recent late payments or collections or anything like that.
So, how recent can the collection be? Would you say 1 year, 2 years, or if they have a 6 month collection, 5 month collection?
Probably, probably 5 years or more. It's really variable depending on the situation and the full report that I look at. So it's kind of hard to determine in hypothetical scenarios, but as long as they have an overall strong credit report and good income, then that's going to be something that we can look at.
Now, we all know that a lot of people got student loans that's going to affect their DTI. And is it a way to where you could look at the student loan where it can affect their DTI, but it's still affected? But do you add a percentage on that debt to be able to determine the payments, what they're going to pay on that student loan? Or because some people have a lot of student loans that it will prevent them because they can make 50,000, 60,000. But if they owe student loans, is there a threshold to where you say, okay, like this, say for a prime example, like homes do. When you buy the home, they understand student loans, so they add 1% of that to your DTI. Do y'all
So,
add?
oh, I was
Go
going to
ahead.
say, ironically, almost the student loans really don't affect it at all. It might affect the DTI slightly, but it doesn't affect their utilization. And from all the reports that I've done and seen that have student loans on them, it isn't really much of a difference in whether or not they're approved. Um, but on the other hand, the if they have a home and that's going to be like a single charge for like I don't know, depending what their mortgage is, that is a little bit more detrimental, I guess, on how much debt to income they have. So it really just depends, I guess, how much they make to offset that.
Okay, okay. And then now, the determining factors, what do you look at? Do you want a 2 years tax return, bank statements? What type of documents do you ask for to determine if they, once they qualify, what type of documents you ask for from the client to determine where you want to take them?
So the two documents that I need for pre-approval is their FICO 8 credit report and then their last 2 years of either their tax returns or their last two pay stubs. So those are the only things I need to be able to get a client pre-approved. And then let's say we do pre-approve them, I would have a list of supporting documents I need to get their file started, but we don't worry about that up on the front end, so not to overwhelm the client. All I need is those 2 years of tax returns or last two pay stubs, and then the FICO 8 credit report.
What's your approval rate?
Um, it's very different based on the client. I don't exactly have an approval rate just because we each individually who work here deal with just a vast different client base. So I would say maybe 50%. I really don't have an accurate number there. But we do try to get everyone approved as long as they meet our minimum requirements. It based on, if we're getting referrals sent to us, sometimes the person who refers them doesn't check if they meet those minimum requirements. Sometimes they do, so that really affects it. If my referring partner has been transparent with who they're sending the application link to. Um, as long as they meet the minimum requirements, though, it's a pretty good chance we can get you pre-approved. Um, doesn't necessarily mean you're going to get the $500,000 that we can lend up to if you don't get qualified for that, but we can try to get you funded at least 50,000 or more, depending on what the client qualifies for.
And once again, there's no hit to the credit report to find out what they could be approved for. So basically,
Correct.
they could find out they're approved and it costs them nothing. At the same time, they can actually learn and what to do to steps to be approved. Because at the end of the day, if some people can't be approved, when you tell them the steps that they need to take to be able to get approved, do you have that mechanism in place if Mrs. Jones comes to you and it's something that she's lacking? Do you let her know what she needs to do to jump over that threshold to get what she needs?
Yeah, so I will tell them the reasons if they're not approved for whatever reason, if it's collections, late payments, if their score isn't high enough, if it's the income, the debt to income ratio, or the utilization. I do make that clear what, um, I guess, what the hindrances, but I don't necessarily have the means to fix that for them. But I will let them know what's wrong. And then if someone like yourself um, can help the client actually get it fixed, that's amazing.
And what made me intrigued about y'all is I have clients that have actually gotten loans, so I understand the process. I
Hmm.
actually seen the real time the process, actually seen the emails go out, I actually seen the offers that my clients got, and they've been successful with through y'all business lending. And I like the process because it's just swift. One thing about this Swift, you say you get information in, someone at your office will always contact the client and email them, make sure they stay abreast, and you work closely with the referrer as well because you work tightly with the referrer, whoever refers. If they want to refer and be your back and actually help y'all get to the same goal, I've seen it work and I've seen people be successful through your lending. That's why I reached out to Preferred Lending. I just wanted to put somebody's face behind it so my clients to be able to see the ones that got the loan, the ones that want to be able to get the loan, and the ones that want to qualify for the loan, right?
Hmm.
So when they want to get this loan, you have a website. Let's talk about this website and what do your website acts as well once they go on the website. What's your website and what do they do when they get on the website?
So I don't really use the website too much. I know we have one. Obviously, it's got all of our the people who work at the company there, and there is a link to apply, and there's also a link to sign up as a referring partner if that's something that other people in our industry want to do. Overall, it kind of gives just some brief info on the requirements for our funding and everything like that. But when I'm working with the client, I do it more personally, just over email, as like I'll usually get an introduction from the partner instead of just them sending to the website. They'll introduce them over email, and I'll send them the link directly to apply for funding, which just makes it a little bit simpler because I tell them those are the what documents they need to upload to that link, which is again just the FICO report and their proof of income, and that just makes it a little bit more straightforward for the client to just communicate with me directly and get funded a little bit more simply and personally.
Now, I like what you said directly because that's how I dealt with you. I got a broker, which was you, and another guy that got your company. He got a broker as well. So it's different brokers because one thing about Preferred, they got a lot of people that like to join in their product because they're ethical. So I see a lot of brokers because the broker wouldn't get behind something if they couldn't get it wasn't an injury behind it. So
Mm-hmm.
now, let's just say, what's your email, but you connected to the preferred. But if they wanted to get connected to you, where you could actually send them the link. What email do they go through or phone number contact to be able to get you? Because now they see you on the platform and they get a feel of you. So some people don't want to go to the website. How could they go directly to you?
Yeah, so my email is skye, skye, at preferredfundinggroup.com. I know that is a mouthful, so that's kind of a long one. Um, Perhaps we can write it out here or something. And then, or you could call me. My phone number is 630-294-9114.
And one thing I can say about you, you have been prompt. I text you, you text back. You know, you stay abreast. You send my clients an email. I call you to tell you to reach out to the client. You reach out to the client. So this is why I wanted to sit down with you because you want things to happen. You want to help the client. And
Mhm.
in my company, in my, I always say the money is the byproduct. It's what the client wants and what's their goals. And that's where my
Exactly.
job comes in. I like to educate people and be able to let them see transparency instead of looking at, because sometimes they Google companies and see based out in California, based out in Chicago, and they may be in New York, and sometimes they be scared to take that leap of faith because they don't know who that person is behind that website or even
Right.
behind the email. So
Yeah, definitely.
sometimes you want to bring the person because I've dealt with a lot of companies. Like I said on my YouTube page, I did loans in basically damn near every state, not to toot my own horn. But to be able to deal with people that didn't know me, I had to find a way for them to see me, and that's why I created my YouTube page. Because there's a lot of companies, but the companies are great. The companies are great. They great. But it's just that I got to deal with him over email and with today AI and so much stuff over the internet. You want
Right.
to
It's
know
like,
who that real person is. That's why I reached
yeah.
out to you and looked at you. I looked at your credentials, and you worked with me very well. Like I said, you send me email prompts. Now, when a client comes to you, is there any fees that's attached to your loan process? How do that work?
So yeah, our one and only fee is going to be a processing fee of 15%. It is on the back end, meaning we wait for the client to get funded first and foremost, the total amount directly into their bank account. And so once they get funded, we'll then ask them for the 15% invoice, which we allow them to pay using those same exact funds they just received. So this way they don't be coming out of pocket at all. And we do invoice it as a consulting fee, which a lot of our clients appreciate when it's tax season.
Now, but one thing about that fee is a lot of things that they can call you back on and get educated on because at the end of the day, it comes with they can come back and get funding from you. Now, when they come get the loan and they wanted to come back and refi that loan after a certain amount of time that they was dealing with, could they come through you to refi that loan and get another loan from another company? And would you pay them to refi something to pay off at a low interest rate? Or would you recommend them go to their bank at that point because they being unestablished? Some type of
It
payment is
It depends on how much they're looking for and how much time has passed. Because let's say they want to get this another loan to refinance it, like if that's their goal, um, we're not necessarily going to fund them for that purpose. I can see if they qualify for additional funding, and if they do, then that's great. They can use it for whatever they'd like. We have no restrictions on what our funds are used for whatsoever. So technically, sure, that is a possibility, but I wouldn't say we necessarily advertise or market that that's something people can do. Especially because if they just got funded with us, we're not necessarily going to be able to fund them right away again because even though it is a soft pull from the start, once they're in processing after pre-approval, of course, those are going to end up being hard inquiries if they accept an offer. If they don't accept any offers, there's no additional to the soft pull. So they're okay. But if they wanted to accept an offer, obviously that is going to be a hard inquiry at that point, meaning if they want to come back for additional funding, they are going to have those inquiries on their report. So it will be harder to get them additional funding after they've already gotten however much funding with us to begin with. So that's kind of debated on how much funding we can get them.
the Skye. But like I said, great company, y'all. It's a great company. I reached out to Skye. She's very intelligent. She's very hands-on. That's why I reached out to her because I knew that there was something great to where I could be able to bring my clients because a lot of people was asking me how to get business credit, who's the company to go to, what to deal with, how the process is, who's the person that you want to deal with. And this is why I reached out to Scott Moore. Yes, she's frozen right now and hoping she come back in, but this is why I do interviews like this, ladies and gentlemen, to be transparent with y'all. To let y'all see that that person behind the email is just, somebody that, you know, we should be able to learn from. And this is why it's so important to be transparent, ladies and gentlemen. It's very important to be transparent. And that's why I be bringing, I'm going to be bringing people on my platform to talk to y'all and understand that we all could be able to get business from it. It's easy. And so you go out there, get your LLC, you have the credit score, start a company. Go get money to start your business. Go get a partner. Go get somebody. Go get a financial advisor. Speak to people, important people like I do. You see, I reach out to people. I don't know it all. I defer to people as well. But I defer to people that know. I defer to people that give. I defer to people that see. I defer to people that hear. I just say people that know. But at the end of the day, when you want to defer to people that knows everything when you trying to do what you're doing. And that's why I did this video. And I really appreciate y'all. I'm bringing more for y'all on my platform and making sure that we be building figure y'all nothing but great content. Thank you. I appreciate y'all for coming out. And maybe Skye will come back in here, but I'll be able to talk with her. Make sure y'all reach out to Skye. She's very smart. I did some loans with her, $70,000 loan, $100,000 loan, $40,000 loan. I done did it with that company. So I'm letting y'all know the reputable company. Make sure y'all go look up preferredlending.com or reach out to Skye and let her evaluate your business and see how much you can get funded. There's nothing but a phone call away. Thank y'all, and y'all have a great day.